Warren Buffett once said, "Don't watch the market closely. Buy a stock and hold for the long term. Dividends will take care of the rest." This timeless advice holds true in the ever-evolving financial markets, where daily ups and downs can rattle even the most seasoned investors. We've got 5 stocks lined up, each with 2 strategies. One for those with investment capital, and another for those willing to let their investments grow over time. We'll break down the initial investment needed and the time it takes to hit that $100 a day goal. Stick around to the end, where we reveal a stock that doesn't demand a massive upfront investment or extended waiting periods. At number 5, we have Visa, identified by the ticker symbol V. Visa is a powerhouse in the global payments technology landscape, currently boasting a dividend yield of 0.77%. You might be surprised that to reach a $100 a day or $3,000 per month, investors would need to invest over $4 million in the stock. Now, that might sound steep, but hold on. This stock isn't playing the short game. With its current dividend yield, it's all about the long game and the magic of dividend growth, measured by the CAGR, or compound annual growth rate. In the case of Visa, that CAGR is an impressive 18.49%, setting the stage for our strategy number 2. Let's dive into the numbers and see how Visa's growth potential can make a difference in your investment journey. In this strategy, an investor can kick things off by investing $10,000 and patiently waiting for their investments to blossom, all while cleverly reinvesting their dividends. Fast forward 5 years, and the investment has grown to $10,649. At the 10-year mark, it's dancing at $12,366. Extend that timeline by a decade more, and behold, a substantial $39,900 CAGR. In just 3.5 more years, that value nearly quadruples, soaring to an impressive $147,901. An annual dividend of $41,382 translates to $3,445 per month, or $115 per day. The grand total time to hit our $100 a day goal with strategy number 2 is 23.5 years. Now let's talk Visa. This financial juggernaut operates VisaNet, a transaction processing network that deals in credit, debit, and prepaid card products, offering a collection of innovative payment solutions. Visa's financial track record is nothing short of impressive, witnessing consistent revenue and earnings per share growth. Sales have nearly tripled in the past decade, with analysts predicting an approximate 11% annual growth rate in years to come. While Visa's valuation might seem a tad high, its history of outperforming earnings expectations and sustained growth more than justifies it. The company's knack for exceeding market projections firmly establishes its authority in the investing realm. Moving on to number 4 on our list, we've got Abbott Laboratories, known by the ticker symbol ABT, a key player among the Dividend Aristocrats, a prestigious group with a stellar track record of boosting dividends for over 25 years. Currently, this stock dishes out a yearly dividend of 2.11%. Now, for strategy, one enthusiast's looking to make $100 per day right off the bat. The investment figure rings in at $1.7 million. Hold on though, because we've got more exciting options coming up with the lower investment requirements in Strategy 1 and quicker results in Strategy 2. Now, let's delve into Strategy 2. This stock flaunts a 10-year CAGR of 13.8%. Imagine investors putting in $10,000, letting it ride, and reinvesting those sweet dividends. In 5 years, their investment blossoms to $1,649. Fast forward a decade, and it stands tall at $5,673. Give it another 11.5 years, and behold, the initial investment shoots to a whopping $139,700. That's $351 per month, or a cool $12 per day. Abbott Laboratories is a powerhouse across 4 primary segments: nutritional products, established pharmaceuticals, diagnostics, and medical devices. The company rides the growth wave driven by an aging global population and expanding into emerging markets, especially in the branded generic pharmaceutical sector. Ticking all the boxes for stability, Abbott has a remarkable competitive advantage, with consumer medical products like Ensure ensuring robust sales even in economic downturns. Their unwavering commitment to research and development further underscores their dedication to long-term growth. Notably, Abbott weathered the 2007 to 2009 financial crisis, showcasing its recession-resistant nature. Securing the third spot on our list is 3M Company, recognized by the ticker symbol MMM. This stock is a game changer, balancing a solid current dividend yield of 6.93% with a robust 10-year compounded dividend growth rate of 9.15%. Now, for strategy, one enthusiasts aiming to pocket $100 per day right out of the gate. They would need to invest $519,450. While this figure is notably lower than the previous stock, it still lingers on the somewhat higher side. Let's dive into strategy 2 with a 10-year CAGR of 9.15%. Investors putting in $10,000 and reinvesting those dividends along the way would see their investment grow to $1,529 in 5 years. Hit the 10-year mark, and that figure doubles to $3,856. The compounding magic is vivid here, thanks to a sturdy starting current dividend yield, backed by a robust CAGR. To reach the covered goal of $100 per day, investors need to nurture their investment for 17 years in this stock. At the end of this journey, their investment would be valued at a staggering $15,557.71. 3M is a global powerhouse operating in around 200 countries. The company boasts 4 dynamic divisions: safety and industrial, healthcare, transportation, and electronics and consumer. With a diverse product catalog featuring over 60,000 items, 3M stands as a key player in the industrial manufacturing industry. What sets 3M apart are its exceptional competitive advantages rooted in technological prowess and a treasure trove of intellectual property with over 100,000 patents to its name. Despite recent challenges, including supply chain disruptions and the impact of the pandemic, 3M maintains a solid track record of dividend increases. In fact, it proudly holds a spot in the elite group known as the Dividend Kings, having raised its dividend for over 60 consecutive years. Let's talk about Abbvie, known by the ticker symbol ABBV, securing the second spot on our list. This pharmaceutical giant boasts a remarkable 51-year history of consecutive dividend growth, earning its place as one of the Dividend Kings. Currently, Abbvie offers a solid dividend yield of 4.05%, paired with an impressive compounded annual growth rate of 13.98%. For strategy, one enthusiasts aiming to earn $100 a day straight from the first year, they would need to invest around $888,888. This investment would yield an annual dividend of $36,000, translating to $3,000 per month or $100 per day. Now, let's explore strategy 2. With a $10,000 initial investment and reinvesting dividends, investors' investment would grow to $13,485 in nearly doubling to $23,750 in 10 years. Fast forward another 6.5 years, and at the 16.5-year mark, their investment would be valued at $135,900. That's $2 per month or $17 per day. Abbvie stock stands out as a beacon of consistency and growth, with dividends soaring by nearly 300% since its spin-off from Abbott Labs in 2013. Abbvie is committed to sharing its profits generously with shareholders, and the free cash flow comfortably blankets dividends, ensuring a robust foundation for sustained dividend growth at an impressive rate of 10 to 15% annually. This year brought a pivotal moment for Abbvie as it navigated challenges, particularly in the face of competition for its major revenue contributor, Humira. While Humira's sale experienced a dip, Abbvie's new product lineup showcased substantial growth, positioning them to eventually fill the revenue void left by Humira. Adding to its strength, Abbvie boasts a robust pipeline with over 90 indications in development, securing its future well beyond 2024. In summary, Abbvie's winning combination of a healthy dividend yield, promising growth prospects, and solid financials make it an attractive choice for long-term dividend investors. However, it's essential to exercise caution and ensure a margin of safety before enhancing one's position. Finally, our top pick for this video is Arbor Realty Trust, recognized by the ticker symbol ABR. This real estate investment trust, REIT, has consistently secured its place among the top 10 for its appealing valuation and robust dividend metrics. With a current dividend yield of 12.29% and an impressive dividend growth rate of 13.14%, Arbor Realty Trust is about to take center stage. Before delving into the investment strategies, let's explore why ABR claims the top spot. Firstly, its high yield is a standout feature, significantly outperforming the average yield. Secondly, as an REIT, ABR is mandated to distribute at least 90% of its taxable income as dividends to shareholders, making it an enticing prospect for dividend-focused investors. Arbor Realty Trust operates across 3 primary platforms: balance sheet loan origination, GSE agency loan origination and servicing, offering diversified and recurring income streams. The company's versatile multifamily-centric operating platform and involvement in various real estate lending categories, including senior housing, bridge financing, and mezzanine equity, contribute to its strength. Now, let's crunch the numbers. With a current dividend yield of 12.29% and a 10-year CAGR of 13.14%, for Strategy 1, investors need to invest only $292,900. Initial investment and reinvested dividends will more than double the investment to $23,550 after 5 years. Fast forward another 5 years, and in a decade, the initial investment will be valued at $15,356. That's $3,324 per month, or $110 per day. While we've discussed strategies to make $100 per day with dividends in this video, you might also want to explore other options in the world of passive income. Check out our video on the top 5 passive income cash flow assets for 2024, where we unravel Robert Kiyosaki's key strategies for success.